Negotiate caps and baskets in English energy contract phrases. In energy contracts, limits like caps and baskets shape who bears financial risk when something goes wrong. A cap sets the maximum liability a party will face for a single claim or within a defined period, which keeps exposure predictable and helps with budgeting and insurance. A basket is a threshold. Losses must exceed it before cumulative claims trigger liability, so small frequent issues may be absorbed without payment. Clear, precise language about these limits prevents misunderstandings and costly disputes later. When money and operational continuity are at stake, good drafting protects both parties and keeps projects moving. Not all caps are the same, so know which fits your deal. An absolute cap is a fixed monetary ceiling, straightforward and easy to model. A sliding cap changes with revenue, production volume, or indexed measures, offering flexibility tied to business performance. Per-event caps limit liability for each incident, while aggregate caps limit total liability over time. Choose based on whether you fear one big loss or many small ones. Finally, negotiate the cap basis clearly. Is it calculated on gross values, net after deductions, or per megawatt-hour of energy delivered? Each basis shifts economic exposure differently. Baskets come in different structures that change when and how liability kicks in. A deductible-style basket excludes losses below a threshold, so only amounts above that level count toward recovery. A retention-style basket means the specified party retains the first layer of loss and pays directly, which can reduce claims frequency. De minimis baskets ignore tiny individual claims unless they aggregate, while cumulative baskets only trigger after total losses reach the threshold. This affects timing and cash flow. Finally, choose how to express the threshold: a percentage of contract value, an absolute currency amount, or a unit-based measure like MWH. Each has different practical effects. Precise wording avoids later fights. Prefer cap is limited to when you want an absolute ceiling, and use cap equals only where calculation is exact and unambiguous. Specify timing and scope with phrases like per occurrence, in the aggregate, or per contract year to define when limits reset. Always state the calculation method and the reference data, what index, which revenue figure, and which deductions apply. Avoid vague words such as reasonable unless you provide a strict definition or objective standard, because imprecise terms invite disagreement and litigation. Caps and baskets are bargaining chips in negotiations. Each concession usually costs something. A lower cap reduces liability for your counterparty, but typically results in a higher price or stricter covenants from you. Raising the basket threshold shifts more small losses onto the other party, meaning they retain greater risk. Expect requests for carve-outs. For example, fraud, willful misconduct, or tax liabilities are often excluded from caps. To bridge gaps, consider step-down caps that decline over time, or sunset provisions that remove limits after a period. These can balance protection with commercial reality. Draft clauses that leave no calculation to chance. Define the cap by naming the currency, the scope, which claims it covers, the time period per event, per year, aggregate, and the exact calculation method. For the basket, state its type, the numeric threshold, aggregation rules, and any exceptions or carve-outs. Include worked examples and sample calculations in schedules, so both sides see the outcome of common scenarios. Finally, add audit and adjustment mechanisms so parties can verify data and correct errors. Transparency reduces disputes and builds trust. Prepare model clauses with sample numbers before the meeting so you can propose clear, concrete options, and avoid surprises. Use plain, active sentences and repeat key terms consistently. Consistency helps counterparts and translators track meaning. During talks, ask short, clarifying questions, and always confirm verbal offers in writing to prevent misunderstandings. Practice common legal phrases you'll encounter, like subject to, without limitation, and notwithstanding, so you can parse and use them confidently. These steps help you negotiate effectively and avoid being tripped up by ambiguous phrasing or fast-paced discussion. Caps and baskets are powerful tools for allocating financial risk in energy contracts, so define them precisely from the start. Spell out the scope, exact calculation method, timing, per occurrence, per year, aggregate, and any exceptions or carve-outs. Balance risk allocation with commercial concessions. Be prepared to trade price, covenants, or specific carve-outs to reach agreement. Finally, use clear English phrases, worked examples, and written confirmations to lock in meaning. Precise drafting and concrete schedules prevent disputes and keep projects on track.